So in this lesson, you're going to learn how smart money traders get trapped using invalid fair value gaps. So for a recap, a fair value gap is where price is delivered on one side of the market. That one side of the market forms an imbalancement, and that gap is your fair value gap. So when price retests that area, you expect a reaction. And of course, a valid fair value gap will be overlapped with a shelf. So as you can see here, this is your fair value gap. And if you look to the left, you'll see a swing low. That swing low is your shelf. So this is what makes a fair value gap valid. So when price does retest that area, it will more than likely attack the shelf first. So now that you know what a valid fair value gap looks like, let's see all the invalid fair value gaps and how the market takes advantage of smart money traders who trade fair value gaps. So let's take a look at this example. So as you can see, this is your fair value gap. And again, everything looks good on the first sight. As far as your formation, you have 3 green candles all in a row. There's no red candles in between. So this is your fair value gap. But now look to the left in between this candle. Is there an overlap? As you can see, this is your fair value gap. Is there an overlap here? There's not, because the overlap is right here. This is your shelf. So your shelf is not overlapping with your fair value gap. So this would mean that this fair value gap is invalid. But a lot of smart money traders will take this entry and take a look what happens. Price will take them out. But once price takes them out, price reverses. So essentially what happened is price stop hunts your fair value gap and tricks all the smart money traders and forms your purge, takes out all the smart money traders, and continues with the direction that you had intended, which is your trend. Now, what can you do with this information? How can you take advantage of smart money traders getting trapped and trading against them? So for one, you need to understand what an invalid fair value gap is. And once you understand that, you need to wait for smart money traders to lose their trade and get taken out of their position for you to enter the trade. So here's an example. As you can see, this is your fair value gap. And now when you see your fair value gap failing, what you're waiting for is a close back inside of the range. So once you get that close back inside of the range, you can anticipate price to, since price is coming from your discount, you can anticipate price to reach this area. And this is one way to trade it. There is a much more efficient way to trade fair value gap traps than this way. We're just starting off with this method. So an easier way to use your invalid fair value gaps and take advantage of the smart money traders is you wait for price to visit your fair value gap and have a pullback. That pullback will be your entry line. So once price gets below this level, once price gets below this initial first reaction again, you're waiting for price to close this entire level. So price will close out your fair value gap. So when price does get back to this level and gets right below this swing, you're waiting for price to close your fair value gap. And this will be your first TP. Your second TP can always be the extreme of your previous swing. So your second TP would be somewhere right here. Again, what you're waiting for is for that first interaction to happen. And then once the interaction happens, price will revisit this area. And once price gets below this area, you're in an entry for your first TP right here and your second TP right here. So now let's look at a example. So here's our example. So as you can see, this is our fair value gap. And if you look to the left, there is no overlap. There is no shelf. So what are we waiting for? We're waiting for price to approach this area. Once price approaches this area, we want a pullback. Once we get that pullback, we're waiting for price to get above this level. Once price crosses this level, we're looking to close this area and close the fair value gap as our first TP, and our second TP would be our extreme. So here you have your reaction. Once you get your first reaction, you have your line right there. And once price gets above this level, you're looking for a first TP to close your fair value gap, and your second TP would be at your extreme. So price reached your first TP. Now you are looking for your second TP. And price reached your first TP before flipping and going the opposite direction. So now, once this happened, once you took all your buy positions and obviously you won the trade, you seen that price closed and closed back inside of the range. So what happened here? Here is your fair value gap purge. So once you got that and price closed below, now you can start taking short positions. Before you proceed, make sure you subscribe to the channel, like the video, leave a comment, and make sure you visit our website, etmtrading.podia.com, and use code ETMARMY for 20% off. So here's another example. This is our fair value gap, and if you look to the left, there is no overlap. So what are we waiting for? Same thing again, we're waiting for our first interaction. Once we get our first interaction, then we're waiting for that cross to close out. So price is in our fair value gap. Let's see if price pulls back before closing this entire gap. And price had a pullback. Now, when price does close this level, even though this would not be one of my favorite setup just because you don't have enough range. As you can see here, you don't have enough range. Because if you had more space, if let's say this reaction stopped right here, then you have this entire range. But now as you can see this close, this range is pretty small. So in this case, I would advise you to ignore this trade just because the risk to reward wouldn't make sense. But if you're still insisting on taking this trade, what I would advise is to go with a lower position and target your extreme. So you would target your extreme level. Your extreme level you can target your extreme level. And of course, once price closes out this area, you want to shrink your stop loss and get closer to break even. So obviously you would be starting off at your fair value gap. You'd want to close it in as price crosses your first reaction. And you had a successful trade. So if you had the question of how do we get to our extreme level as our TP, you pull out your fib and look at that swing that you're targeting. So if you're targeting this swing, you want to see the nearest low, and that last low right here, you pull out your fib, which the settings are your quarters. And what you do is you highlight your extreme, which is your top 25%. So what happens here is you want to take your profit at that 25%. Why? Because this is a danger zone and price could always reach this level and reverse from this area. So when trading this type of setup, you want to disregard previous reactions. So this previous reaction, we're completely disregarding it. The only first interaction that we're looking at is, let's say price reacts and then approaches. It all has to happen in a span of one cycle. We're not looking at a previous reaction. As you can see here, you have your reaction. So what you do, you wait for this level to be broken and then you take your entry. Now the next question is, where would your stop loss be? Initially, you would want a low to be formed, and once that low is formed, and price comes up here, your stop loss would be right here. And obviously your TP, your first TP is right here. Your second TP is your extreme, should be right here. And another way of choosing your stop loss would be look at the area with the most resistance. Find the area where price was rejecting. So as you can see, this area right here, price rejected from this area here, here. Could even bring it down to this rejection. So as you can see, this entire area, price been rejecting from this area. So you understand that if price gets below this level, price might as well continue lower. So your stop loss would be here. So it's either you pick your stop loss as your swing, or if you're not looking at your swing, you can be safer and have your stop loss right here. So now you're in the trade. Your first TP, once you hit your first TP, you go to break even. And you already took 50% of your position, so now you're waiting for your second TP. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and leave a comment. What lesson do you guys want next?